Welcome to Dorsey & Whitney's webinar on listing on the NYSE American for Canadian issuers. I'd like to introduce Chris Doerksen, a partner in Dorsey's Capital Markets and Corporate Governance and Compliance Group. Take it away, Chris.
Thanks, Sean. Today's webinar is being presented jointly by the New York Stock Exchange and Dorsey & Whitney. I'm Chris Doerksen, and I'm joined by Ajay Kanani of the New York Stock Exchange and Ken Sam of Dorsey & Whitney. Ajay manages the Canadian and EMEA arms of international capital markets at the New York Stock Exchange. Based in New York, he's responsible for leading the creation of the exchange's relationships with Canadian and EMEA companies. Prior to joining the New York Stock Exchange, Ajay spent time in equity capital markets with several banks in London, Hong Kong, and New York. Ken Sam and I are both partners at the law firm of Dorsey & Whitney in the Capital Markets and Corporate Compliance Group, practicing U.S. law from Dorsey's Denver and Seattle offices, respectively. We help Canadian companies with their U.S. cross-border needs, including cross-listings, public offerings and private placements, mergers and acquisitions, SEC reporting, and other matters. I'm also a co-editor of Dorsey's Cross-Border Counselor blog, which provides those U.S. legal updates that are of most direct value to Canadian companies and advisors. A few initial housekeeping matters. Participants will be muted, but if you have any questions during the course of the presentation, we encourage you to submit them using the chat feature, which you should be able to access at the bottom of your screen. If we don't have time to answer questions at the end of the presentation, we will follow up with you personally after the presentation. Also, feel free to reach out to any one of the presenters using the contact information in the slide deck. CLE and CPD credit is expected to be available in a number of jurisdictions. We'll announce the CLE code in the middle of the presentation for those in jurisdictions that require one. The agenda for today's session is pretty simple. We'll start with Ajay, who will provide an overview of the NYSE American and why listing on that exchange makes sense for so many Canadian companies. Ken and I will then walk us through the formal listing criteria, the process for listing, and the implications of being a listed company. In our discussions, we'll focus on the requirements that apply to companies that are incorporated in Canada and that qualify as foreign private issuers as opposed to U.S. domestic issuers. And the reason for that is not only the audience, but because Canadian foreign private issuers are eligible for a number of exemptions and special features that make listing even easier than it is for a U.S. company. I'll now turn things over to Ajay.
Thank you, Chris. On behalf of the New York Stock Exchange, I would like to start by thanking both you, Ken, and the entire Dorsey team for organizing what should be a pretty exciting webinar over the course of the next hour. And all of this, despite the fact that we continue to live and find ourselves in a COVID-ridden world. Once again, Ajay Kanani, Head of Canada and EMEA Capital Markets. And before I dive into some of the details, I'd like to make it very clear that the NYSE takes immense pride in our partnership and friendship with Canada and its corporate community. We remain fully committed to assisting a growing number of Canadian companies accessing, the global capital markets. Needless to say, this includes supporting the various high-profile Canadian American executives involved in running and growing the multiple global companies that are listed on the NYSE. The forum may be different this year with it being virtual, but the NYSE is glad to be alongside Dorsey for what should be an exciting session. Which naturally leads me into the fact that the US capital markets is the center of global capital markets, essentially. And the NYSE, we are the largest global exchange with over 29 trillion in terms of market capitalization listed with us. At a very simplistic level, there's a number of reasons why the US capital markets are considered to be the center of global capital markets and why the NYSE continues to attract, some of the biggest and best names from world over. Needless to say, with a fantastic community that we have, which we can touch upon in due course, it is the profile and prestige of being on the New York Stock Exchange. And then when we look beyond that and we look to the US in general, it is things like access to liquidity, the institutional investor base that is extremely savvy here in the US and extremely diverse. Adding to that, it is the acquisition currency as companies continue to grow, as they look to expand their global footprint. The fact that you have a US denominated share makes it that much easier as you look at potential future M&A transactions, as far as your growth is concerned and prospects related to that is concerned. Similarly, looking at you as a company, it's the research coverage, it's the ability to get your story out there in and amongst the investor community is second to none in the US. And of course, tying into all of these things is the fact that this is where a significant proportion of your peers are listed and future peers are listed. One of the other things that we will look to talk about is the simplified listing standards that the NYSE has implemented since back in 2014, which a significant number of companies have utilized and benefited greatly. Chris, if we can. I would like to start, and thank you, Chris. I would like to start with highlighting one of the key differentiators to the New York Stock Exchange. And this is a key differentiator, when comparing us to any exchange world over. And I will try and keep it simple. Please feel free to submit any questions as I speak through this. We'll be more than happy to answer it either as we talk through this or towards the end of the conversation. One of the key benefits to listing on the New York Stock Exchange is our unique market model. Whether you compare us to peer exchanges in the US, up in Canada, London, Frankfurt, Tokyo, you name it. Our market model is extremely unique to the New York Stock Exchange. And at a very simplistic level, if I were to explain the market model to you, we have best-in-class electronic trading technology as any exchange in the world. However, where the NYSE differentiates itself is its ability to have designated market makers that sit on top of that electronic trading technology. And for lack of a better term, your designated market maker's job is to dampen volatility, keep the spreads tight, and act as an extension of your IR function. This is extremely important as far as companies are concerned. And when I talk about your designated market maker, I am not talking about your generic broker-dealer that exists within the US marketplace. There are hundreds of broker-dealers in the US marketplace. However, your designated market maker has an obligation and a responsibility to you. And this is something that each company that looks at the NYSE has the opportunity to select a market maker that they're most comfortable working with and someone who will represent and support them for their life of the listing in the US marketplace. Tagging onto that from a small to medium-sized company's perspective, what you will find is our market model also makes it a centralized auction model, allowing for you to be in a position to maximize the volumes that are executed on our trading floor. Just to add to that particular point, over 28% of global liquidity flows through the New York Stock Exchange floor. When you combine competing exchanges, and I'm talking about prominent so-called exchanges from other parts of the world and from the North American marketplace, on good days, they account for roughly 24%. So, it just shows you the sheer amount of liquidity and the trade flow that flows through the New York Stock Exchange. We have an extremely transparent market. Price indications are clearly communicated across the board. Your underwriters, the broader marketplace, the investment community are extremely aware of what's happening when stocks are being traded on the New York Stock Exchange. It is a very collaborative marketplace as well. Your designated market maker will work very, very closely with you and with their peers within the trading community to ensure you know exactly where your stock is, what's driving movement as far as your stock is concerned, as well as your sector is concerned. And so that collaboration is hugely beneficial as far as companies are concerned. And of course, there is the element of flexibility. Our market makers reserve the right to delay opening your market or opening your stock on a particular day if there is unusual activity happening within the marketplace that may cause an undue price dislocation. So these are just some of the key benefits that we wanted to highlight as far as our market maker is concerned. And as we dive into the next slide, this is something that I have been referencing in terms of what your market maker does for you. I spoke about the fact that they tighten volatility, they dampen volatility, tighten spreads and act as an extension of your IR function. First and foremost, they take accountability, as I touched upon, and we can provide you with multiple examples of this happening in real life scenarios. A very simple example that I can use, although not a great example because of the nature of the example I'm about to provide, but a large mining institution, a global brand, once had a bit of a disaster. They are cross-listed on the New York Stock Exchange as well as a foreign exchange. They had a dam burst, an unfortunate event, and unfortunately a number of lives were lost in a nearby village as a result of this. On that particular day, the marketplace, their local marketplace, was closed. And so as you can imagine, all the liquidity was flowing through the New York Stock Exchange. Given the nature of news, one would expect that there would be a sharp dip in the stock. The market maker had to step in and take accountability for that stock. And what I mean by that is they had to step in and create a price point at every level as the stock was going down. Of course, they're not in a position to be able to stop your stock from going down in this particular instance, but they had to step in and create a market. Hypothetically speaking, if that stock was trading at $10, they had to step in and create a market at $9.97, $9.94, $9.90. The point I'm making is, unlike your average broker dealer who will come in and out of your stock when they feel like it, your market maker will be vested. In this particular instance, that market maker walked away with a position and an exposure of $170 million against that particular company. They also provide a quoted best price. Their job is to step in, as I've just explained, and provide the best price available, whether it be from a bid or an ask perspective. Again, tying into the same point is the liquidity element. They have to step in and provide liquidity for your stock. They have to be ever present, creating a market as far as your stock is concerned. And if I could use another example, your market maker, look, there's best-in-class electronic trading technology existing all over the world. Where this becomes different is, let's assume you're about to hop on a plane from Vancouver and fly to New York. For the best part of your journey, you're going to be on autopilot mode. Where your pilot becomes important is takeoff and landing, essentially the key phases associated with your flight. And of course, if there's any turbulence, that's essentially what your market maker does for you. Your market maker is ever present when your stock is about to open. Why? Because of the impact the Asian and the European markets are likely to have on the North American markets, as well as end of day, close of market, which is where the book rebalancing activities happen. They are ever present, ensuring that there is no foul play happening as far as your stock is concerned. And tying into all of this is the fact that they maintain a very, very tight spread. This is something extremely unique to the New York Stock Exchange. No other market is around that provides this. Moving on from the first key differentiator, let's talk about the network of companies. The New York Stock Exchange is a truly global exchange. We have an extremely global footprint. We have over 525 international companies listed on the New York Stock Exchange from 46 different countries. As far as Canada is concerned, we have over 1.3 trillion market cap in terms of market capitalization listed on the New York Stock Exchange, with over 135 companies listed, either on the TSX as well as the NYSE or just the NYSE. So Canada is a very, very important marketplace as far as the New York Stock Exchange is concerned. It is our largest market outside of the US. This is important because as you look to your future, as you look to potential growth opportunities, as you look to potential partnership opportunities, the New York Stock Exchange does a lot, both in terms of creating visibility for you, in terms of networking opportunities within our network of communities. So what we wanted to showcase here was clearly that it isn't just Canada, whether it be potential future opportunities or growth opportunities in LATAM, in Asia, in EMEA, you name it, we work with partners, with advisors, with issuers from all over the world. Chris, could we move to the next slide, please? And from a small to medium cap companies as well, I just wanted to bring this to the fore as well. Of course, a lot of people look at the New York Stock Exchange as the home of your traditional giants, your larger companies. However, the NYSE continues to be the exchange of choice for small to mid cap companies as well. 74% of all companies by market capitalization, when given the opportunity to come on board, choose the NYSE American. And of course, I'm not moving away from the point that the world's greatest community of companies are here as well, which is why I was very keen to stress and highlight the fact that these are potential future opportunities, future partnerships, future customers as far as you're concerned. By simply looking at, some of the key indexes here in the US, 83% of the Dow Jones Industrial Average listed on the New York Stock Exchange, 73% of the S&P 500. So we essentially have a truly global network, which we're very keen and we work hard to ensure we can create collaboration opportunities for companies, regardless of how big or how small you are. Moving on from the network and a couple of the other key folks that we want to talk about, and this ties in very nicely with the network of communities, is the relentless effort that we put in terms of ensuring visibility as far as our listed companies are concerned. This is just a quote from the founder and chairman of the board of Shake Shack, but this applies across the board. You don't have to be a mega cap or a large cap in order to have the accessibility as far as visibility is concerned. As you will see from the next slide, we're notoriously good, if I could use that word, at ensuring that we do everything we can to maximize visibility and marketing opportunities as far as our issuer community is concerned. Ranging from whether it be our bell, which to some people may just be a bell, but it is a unique opportunity with a truly global audience. The NYSE bell is the only bell that's viewed world over. We have, on average, a reach of 150 million people who view the NYSE opening and closing bell. Regardless of what part of the world you're in, the one bell that you will get to see being rung is the New York Stock Exchange bell. And so whilst it may seem like, it's a bell, it's a truly significant milestone for a large number of companies and a great way to create exposure around who you are, what your brand stands for, and what you are doing with yourself. And tying into it from a social media perspective as well, we're the most followed exchange globally with close to 4 million followers on social media, and it's a great blend of institutional as well as retail investors. It's a great blend of domestic as well as international viewers. So the point we're trying to make is, we will by no means change your messaging. We will work with you in terms of the messaging that you're keen to push out as far as the market is concerned. And we will simply amplify that message to our community of observers who want to learn more about your story and related. And similarly, from a traditional media perspective as well, look, we're in the midst of COVID, so it makes it a little bit trickier. However, under any normal circumstances, we have 36 media outlets from world over reporting live from the NYSE trading floor. And this is a great opportunity, particularly as companies hit key milestones, whether it be new discoveries, whether it be anniversaries. It's an opportunity to get in front of us, talk to us, and use us as a means to get in front of those media outlets who themselves have huge followings world over, to be able to assist you in enhancing your story, in getting you in front of a wider investor pool than you may currently have access to. Chris. Tying into all of this is our investor relations services. We provide a fantastic package to simplify life for issuers who do decide to come to the US and list on the NYSE. We provide a 2-year complimentary service package, which takes care of a number of your investor relations features, to simplify life and enable you to focus on what you're out there to do, which is grow your business and focus on the core elements of your business. And this package is at a value of $93,000 over a period of 2 years' time. It includes the provision of your IR website, which you do need to be compliant with the SEC in the US. And of course, there are other add-ons as well. Things like, taking care of your quarterly webcasts, for your earning calls, press release distribution, even things like whistleblower hotline. And this is there to simplify life for you, but also to create comfort as far as the market is concerned. Supplementing that 2-year complimentary package is our ongoing complimentary services, which is, again, extremely unique to the New York Stock Exchange. We kind of create a triangle as far as the issuer is concerned, starting with our MAC Advisory Center. So that's our market access center, essentially. We have former research analysts and related who work on our trading floor and whose focus is to observe what's happening in the market and provide you with real-time updates. These can be sector-focused. These can be company-focused. It's all created with the aim of simplifying life and enabling you to be in a position where you can proactively be in front of your investors rather than them hearing pieces of news from the wider market coming to you. Complementing that, we also provide a tool called NYSE Connect, and it has been built on top of a FactSet terminal, with the exception that you get unlimited licenses. So there's no restrictions on the number of licenses you and your team have. It can be used across multiple devices, multiple employees. I essentially compare it to a Bloomberg tool without the chat mechanism, but has all the functionalities that you're looking for. And for NYSE listed companies, you get a real-time quote for not only yourself, but also your peers who are listed on NYSE. And of course, the other thing that you do get is bell-to-bell coverage. And this is done both by our market advisory center, your relationship manager, as well as your market maker. Particularly during the start of your relationship, as you're finding your feet within the US capital markets, they will be reaching out to you 3 times a day before market open, towards the end of the day and middle of the day, to ensure that you're perfectly up to date with what's happening with your stock. If there is any unusual volume, where it's coming from, just enabling you to be on top of your investors and ensuring that you're perfectly comfortable with what's going on with your stock. Of course, once companies become familiar with the way our market model works, familiar with the way things work as far as their stock is concerned, again, it's at your discretion. You decide what frequency you want to hear from them. And on that particular point, I'd like to take a pause. I hope at a high level, I've been able to, clearly showcase the benefits of a US listing, and in particular, coming onto the NYSE. Very simply, whether you're already a publicly listed company in Canada or whether you're private. If you are a publicly listed company in Canada, whether you're looking at doing a capital raise or simply enter the US market via a quotation, this is a great way to grow your investor base, grow your profile, ensure that you get additional liquidity on top of what you're already getting up in Canada. If you're a private company, it's a great way to be entering the US marketplace with the support mechanism we put in place to truly enhance the experience you have within the US capital markets. And on that note, I would like to hand back to Chris.
Thanks, Ajay. And we had one question that Ajay, I think, might be good to address before we switch over. We had a question about, we're talking about the NYSE American exchange today, and they wondered if there were any other tiers of the New York Stock Exchange. Maybe Ajay, could you just spend a moment sort of outlining the other tiers and what type of company might want to think about one of those different tiers instead of the NYSE American?
Sure, no, absolutely. We'd be happy to answer that. So we essentially have 2 marketplaces. We have the NYSE and the NYSE American. And to simplify things as far as companies are concerned and what they're looking at, it basically boils down to listing requirements and the appetite as far as the company is concerned. And again, I believe we will be diving into the listing requirements later in this presentation. But you can essentially draw a line at a market cap of $200 million If you're already public, a minimum stock price of $4. If you're not public, of course, you're looking at raising a minimum of $40 million when you go public, your IPO. If you meet those requirements, you can be on the NYSE. If you have a market cap lower than $200 million, then the general recommendation is you start your life on NYSE American, grow your foothold, strengthen your foothold within the US, grow your investor community. And then, it's entirely at the discretion of the company if it wants to continue its life on NYSE American, or if it wants to uplist and move across to NYSE. We have had Canadian companies who have started their life on NYSE American as their market capitalization and their stock price has grown. In some cases, within 4 months of being on the NYSE, they've decided to uplist and join the quote unquote, the big board. So it's extremely simple in terms of the listing requirements as far as that's concerned. Again, minimum $4 stock price. If you are private, you're looking at doing a minimum raise of $40 million and a minimum market cap of $200 million. That would take you to the higher tier. Anything below that, and it would be the NYSE American.
All right. Thanks, Ajay.
Thank you.
And before we go on to the formal listing criteria for NYSE American, just wanted to highlight a few additional benefits of a listing. So we find that for our clients, listing in the US on the NYSE American really opens the door to fundraising in the US. Prior to that, you can always include some US investors that are sophisticated in your financings, but you're really limited in who you can go to and how you can do it. But once you're a listed company that's reporting with the SEC, you can extend your bought deals and other Canadian public offerings to all US investors. And you can do so on a public offering basis where the investors get free trading shares. That doesn't happen automatically, but you can do that by registering the offering with the SEC concurrently with your prospectus filings in Canada. A company that's listed can also start to do at the market or ATM offerings directly on the NYSE American. And in that type of transaction, what the company does is issue shares directly into the trading flow on the exchange at full market price with very low broker fees, and with the company having control over the timing and size of the offering. If the company has any US holders of stock options, RSUs, PSUs, or similar types of equity compensation, the company can quite easily register the underlying shares once it's listed, and that will allow your US employees and others to get the underlying shares with no legends and on a free trading basis. Listing on the NYSE American also provides the company with an automatic exemption under the state securities laws in all of the US states. Those states can no longer regulate the offer or sale of your securities. And that also means that brokers can actively participate in your stock in all US states. And then lastly, Canadian issuers that are eligible for the MJDS system, which we'll discuss a little bit later, those companies are eligible to extend their public offerings into the US on a very simple basis. Qualifying companies are basically permitted to register with the SEC by filing copies of their Canadian prospectus with the SEC without SEC review and without having to comply with very many substantive SEC requirements. So, combining the first bullet on this slide with the last bullet, you can basically do your bought deals and extend them into the US and have a broader group of investors and potentially get a better price. So as I mentioned, we're going to focus on the requirements that apply to a foreign private issuer. So it's important for you to know what that term is. Any company that is incorporated outside the United States and is not a governmental issuer is a foreign private issuer, unless it has U.S. persons that own a majority of its voting securities on a beneficial basis. So in other words, it's majority U.S. owned. And in addition to being majority U.S. owned, it has one of the following additional U.S. connections. Either a majority of the company's directors or executive officers are U.S. citizens or residents, a majority of the issuer's assets are in the U.S., or the company's business is administered principally in the U.S. So if you're a non-U.S. company, you'll be a foreign private issuer unless you're majority U.S. owned and have one of those other nexuses. If you meet both of those standards, then additional requirements will apply that we won't be able to talk about in this presentation, but most Canadian companies do qualify as a foreign private issuer. And I'll now turn things over to Ken, who's going to walk us through the formal listing criteria as well as the process for listing.
Thank you, Chris, and thank you, Ajay. Ajay presented quite a compelling story about listing on the NYSE American. So what Chris and I are going to cover are the listing qualifications and then the process for listing, including SEC registration. I'll start by saying that all securities listed on NYSE American or any other national exchange here in the U.S. must be registered with the SEC under the Securities Exchange Act of 1934. And Chris is going to cover in his part of the presentation the process for registering your stock and also for becoming a reporting issuer in the U.S. Any company that's considering listing should look at the NYSE American Company Guide. And the Company Guide basically sets out the requirements for listing and continued listing on NYSE American. Those include the qualitative requirements for corporate governance, as well as quantitative requirements for the numerical listing standards. I will say this, NYSE American retains pretty broad discretion over the securities that it approves for listing. Next slide. And quoting from the Company Guide, NYSE American considers the nature of an issuer's business, the market for its products, its regulatory history, its past corporate governance activities, the reputation of its management, its historical record and pattern of growth, its financial integrity, and its demonstrated earning power and its future outlook. So basically, anything that you should be considering when you're investing in securities. NYSE American also considers, with respect to foreign companies, the U.S. market interest in the securities. And I'll say this, satisfying the numerical criteria does not guarantee a listing on NYSE American. And we'll look at the quantitative criteria next. This table shows the 4 standards for listing from a qualitative standpoint. All of the first 3 criteria, standard 1, 2, and 3, require shareholders' equity of $4 million. Only standard 1 actually requires pre-tax income of $750,000 US in the last fiscal year or 2 of the last 3 years. Each of the standards requires a minimum share price. It's $3 for standard 1, 2, and 4, and $2 for standard 3. I will say this, that the Canadian issuers typically rely on standard 3 for their listing, but not always. All 4 requirements have a public float market value requirement. It's $3 million for standard 1, $15 million for standard 2 and 3, and $20 million for standard 4. Market capitalization, there's a requirement in Standard 3 of $50 million. And for Standard 4, you can qualify either by having market capitalization of $75 million or total revenues and total assets of $75 million in the most recently completed year or 2 of the last 3 years. Only Standard 2 actually has an operating history requirement of 2 years, but if you look at Standard 1, of course, if you have pre-tax income, you have some operating history. Next slide. All 4 standards have a public float requirement, and that requirement can be met by either having 800 public shareholders and 500,000 shares publicly held, 400 public shareholders and 1 million shares publicly held, or 400 shareholders with 500 million or 500,000 shares publicly held with an average trading volume of 2,000 shares per day for the previous 6 months. Public shareholders do not include affiliates of the company. So officers, directors, controlling shareholders do not count in calculating the public float. Next slide. One section in the company guide that's usually important for Canadian issuers is Section 110. And what Section 110 does is it provides the ability for the exchange to grant exceptions for foreign companies that comply with foreign law, customs, and practices of your home country jurisdiction. In other words, if you comply, for example, with the quorum requirements in Canada, you may get an exemption from the foreign requirements under the listing guide standards, and we'll talk about those in a bit. In order to qualify for a Section 110 exemption, you'll need a letter from your local council, and then you'll have to disclose the ways that your specific law or custom deviates from the U.S. requirement. There are certain requirements that can't be waived, and we'll talk about those in a bit. Next slide. In order to list on NYSE American, a majority of your board members must be independent. There's an exception for smaller reporting companies, and I think Chris is going to talk about whether you can use MJDS and be a smaller reporting company. The board of directors must affirmatively determine that an independent director has no material relationship with the company that would interfere with their independence. And then a company can have a classified board as long as of up to 3 classes, as long as the classes themselves are approximately the same size and tenure. Next slide. One of the requirements that can't normally be waived is the requirement to comply with SEC Rule 10A3. And 10A3 was basically adopted under Sarbanes-Oxley in 2002, following a bunch of accounting scandals, and Congress wanted the various exchanges to adopt audit committee standards uniformly and that complied with the requirements of 10A3. Those requirements include independence. Audit committee must be independent and consists of at least 3 members. There's a financial literacy requirement, so each member must be able to read and understand fundamental financial statements. You must have a financial expert and identify that financial expert. And that financial expert usually has an accounting or financial management expertise. You must have a written audit committee charter, and that charter sets forth the duties and responsibilities of the audit committee, including the appointment of the independent auditors, handling accounting complaints, and holding regular meetings, at least quarterly. Next slide. Director nomination. Directors nominees must be selected or recommended by the board, recommended to the board by either a majority of the independent directors or a nominating committee comprised solely of independent directors. An issuer must have either a formal written charter for nominations or a board resolution. So note that a listed company isn't required to have a nominating committee. It can be done by a majority of the independent directors, but it has to have a process set up for that nomination process. And then there are certain limited exemptions from the independence rules for non-employees that can serve on that. Officer compensation, C-level compensation must be determined by either a majority of the independent directors recommended to the board or by a compensation committee comprised solely of independent directors. The CEO cannot be present while his or her compensation is being deliberated or voted on. Compensation committees, again, NYSE American does not require listed companies to adopt either a former written compensation committee charter, and they are not required to have a formal compensation committee, although most Canadian companies do that. Code of ethics. Each listed company must have a formal code of conduct and ethics that apply to all directors, officers, and employees of the company. That code of conduct has to meet the definition of code of conduct under Sarbanes-Oxley. Any waivers of the code of conduct for directors or executive officers must be approved by the company's board of directors and disclosed within 4 business days on Form 8K or 6K for foreign issuers. Board meetings. Listed companies' boards of directors must meet regularly and at least quarterly. There is also a requirement for an executive session, and an executive session is basically a meeting of the independent directors and without the presence of non-independent directors, as often as necessary, but at least once a year. Committees, we mentioned the requirement for the audit committee to meet at least quarterly. Changes and vacancies must be reported and disclosed anytime that you have a change or vacancy on the board of directors. Officers and director changes must be reported to the exchange promptly. Next slide. For shareholders, each company is required to have an annual shareholder meeting. They were required to solicit proxies under the SEC proxy rules. And again, you can comply with the Canadian rules if you have a Section 110 exemption or use written consents in lieu of meetings as available under applicable law. Notice must be given to the exchange at least 10 days in advance of record dates. The quorum requirement, which I had mentioned earlier for NYSE American, is 1/3. And again, most Canadian companies will apply for a Section 110 exemption from that requirement. Approval requirements at meetings, the majority of the votes cast in person or by proxy. Approval of stock issuances. Now this is something that applies to listed companies where you need to apply to for approval, shareholder approval for compensatory plans. That would include your stock option plans and incentive plans, as well as some other issuance, including certain acquisitions, change of control transactions, certain financing transactions below market value, and then related party transactions. Again, many of these are subject to Section 110 exemptions that are obtained by Canadian issuers. Next slide. DTC Direct Registration. So every company that's listed on NYSE American will become part of the DTC system. The NYSE American rules require that the securities be eligible for participation in what's called the direct registration system. And they have to be eligible for participation, but they don't actually have to participate. We advise companies to consult with their transfer agent to make sure that they comply with these requirements, both for DTC eligibility as well as direct registration system eligibility. Next slide. So the reports are pretty standard. There's a requirement for annual reports. Chris will talk about that. Those must be made available to the company's shareholders on its website. Quarterly reports and interim reports are recommended to be distributed to shareholders, but not required. Quarterly reports must be disseminated via press release, or quarterly results must be disseminated via press release. Earnings release must also be sent to the exchange. NYSE American has a full and fair disclosure standard. It requires the issuer to be actively involved in issuing information that's material to investment decisions, as well as looking for rumors and other reports that might affect the company's stock price and the market for its securities. Next slide. Listing fees. So now that you know what the requirements are, how much do you have to pay? So the initial listing fee starts at $50,000 and increases in increments of $5,000 until you hit 15 million shares. So beginning at 5 million shares to 15 million shares, from $50,000 to $75,000. The maximum fee is $75,000. As far as annual listing fees, is basically the same type of structure based on the number of shares that are issued and outstanding, beginning at 50,000 and reaching 70,000 once you reach 50 million shares or more. Next slide. In addition to the initial listing fee and the annual listing fee, there are additional listing fees that apply anytime an issuer decides to issue shares, and the amount is 2 cents per share. The minimum fee is $7,500. The maximum fee is $65,000, and that maximum fee covers all transactions during an annual basis. Any company that is looking to issue additional shares must file a listing of additional shares application, what we typically refer to as an additional listing applications, before issuing the shares themselves. Next slide. So what's the process? The process for listing is usually a pre-listing evaluation in which you assess the quantitative and qualitative criteria. You review your corporate charters. You complete a Section 110 assessment to determine what you need to request exemptions from. In many cases, Canadian companies have to effect a stock split in order to meet the minimum share price. And then I always recommend that you reach out to your D&O provider to get details on D&O policies moving forward. Then we reach out to Ajay's department. We ask them to do a pre-screening. We submit documentation. Generally, we'll get the green light. You need that green light before you actually submit the listing package. And then that listing package itself includes the application, the listing agreement, Section 110 letters, D&O letters, and corporate documents. Then it's submitted to the listing committee for pre-approval. Upon pre-approval, they'll reserve a ticker symbol for you. Next slide. Once you're pre-approved, Then you'll file a Form 40F with the SEC, and Chris will cover that. Once you have final approval and from the listing committee, you'll be designated a market maker, which Ajay had explained the benefits for. And then you'll commence trading. You get to ring the bell, and then you'll have a qualifications analyst assigned to you.
All right, as Ken mentioned, part of the requirement when you are listing, if you are not already an SEC reporting company, you need to register to become one. And thankfully, Canada and the US have agreed bilaterally to a special program that is only available to certain Canadian companies, and they are able to register with the SEC and report and do their public offerings on a short form basis where the document basically consists mostly of just copies of your Canadian disclosures. So it's very important to understand if your company is eligible for this. To be eligible to use Form 40F under this system for your initial registration, you must be a Canadian issuer that's been reporting in Canada for at least 1 year and is compliant with all your Canadian reporting obligations. The company cannot be an investment company, which just refers to mutual funds and other companies where their primary business is making passive investments in other companies. And then the last requirement, which is the one that usually makes the determination, is whether the company has a public float of at least 75 million US. And in calculating that public float, you have to calculate it within, you get to pick the day, but it has to be within 60 days of your initial SEC filing. And it's based on the prevailing market price on that date multiplied by the outstanding number of equity shares that you have. However, you cannot count toward your public float any shares held by anyone who is a 10% beneficial owner as of the end of the company's most recently completed fiscal year. So if the company meets those standards, that's great, because then you can do a fast and easy SEC registration on Form 40F. Form 40F gives you these benefits. It's mostly just copies of your Canadian SEDAR filings that you would file with the SEC. The SEC normally does not review or comment on the document. That means that the document and your registration can become effective usually within just days of the initial filing with the SEC. The disclosure is, there are exemptions from pretty much almost all of the SEC disclosure requirements. So for example, you don't need to do any US GAAP reconciliation. You don't need to re-explain your business in a different way than you had previously done on SEDAR. For a mining company, this form is also exempt from the SDC mining disclosure rules. So a mining company is not required on this form to prepare new SEC compliant technical reports or to represent or re-estimate any of its previous technical disclosures. So as I mentioned, the contents of a Form 40F, pretty simple. It's a cover page, a signature page, a handful of additional SEC disclosures, and then you attach copies of all material disclosures that the company had filed on SEDAR since the beginning of its most recently completed fiscal year. So depending on the time of year that you're doing this, it could be a little bit more than a year's worth of filings or close to 2 years worth of filings. If there's anything else that would be material for an investor to know, you can attach that as an exhibit as well. For example, you might attach your articles or bylaws, or if you're a mining company, any additional technical reports that are important. You must also file consents of the auditors and of any other experts that are named in your disclosures, such as qualified persons for a mining company. And then concurrently, you file with the SEC a consent to service a process. So the process is really just gathering this information. All of the documents get converted from the format that you filed it onto SEDAR into EDGAR format, because the SEC requires documents to be filed in a specific format. We give the SEC a verbal heads up a little bit before the filing. We file when the company is ready, and then typically within a few days, the SEC will reach out to us, normally confirm that they are not planning to review or provide any comments, at which time the company can ask the SEC to take the filing effective. And once that filing is effective, the company is now an SEC reporting company and eligible to be listed. So what if your company is not 40F eligible? That's going to most likely be the case for a foreign private issuer if the company is incorporated in a different non-US jurisdiction, or if the company didn't have a high enough public float. So in that circumstance, instead you would be filing a Form 20F registration statement. And that form is more similar to what in Canada you have, a filing statement in Canada or a non-offering prospectus. It's basically a long document where you have to file the Sdc disclosure requirements about how you explain your business and your finances and everything, following the SEC content and format rules. The financials that are included with a Form 20F are required to comply with the US PCAOB standards. So you would need to use an auditor that is a PCAOB member, and the audit report might need to be a little bit different than you had previously filed in Canada. The SEC normally reviews a 20F registration, so you would expect to file the document, receive SEC comments, and likely have some back and forth, typically having to file amendments to address SEC comments. And that comment process can take a couple of months or maybe a little bit more if any material issues are identified. If the issuer is a mining company, a 20F issuer must comply with the Sdc Mining Disclosure rules, and therefore there may need to be some technical work done. If the company has any material mineral properties on which you would like to disclose a resource or reserve, you would have to attach technical reports that meet the SEC standards. What about ongoing requirements? So once a company is SEC reporting, it must file an annual report every year, either under the MJDS system under Form 40F. If the company is eligible, under that form, the 40F is largely just filing a copy of your Canadian Annual Information Form, MD&A, and financials with a few extra SEC disclosures added. If the company is not MJDS eligible, you would file a 20F, in which case you would be filing an annual report that would need to follow the specific SEC content rules. In between annual reports, the company must file basically courtesy copies of any material SEDAR disclosure. You file that with the SEC under a cover page that's called a Form 6K. If the company has any 5% shareholders, those persons need to begin filing beneficial ownership reports with the SEC. One of the requirements that we hear the most about from clients is wanting to understand what are the internal control requirements. So the SEC has an exemption for newly public issuers. You do not have to have effective internal controls at the time of your initial registration. You're also exempt from having to certify them on your first annual report. But beginning with your second annual report filed with the SEC, annually the CEO and CFO would have to evaluate and disclose whether the company's internal financial controls are effective. In some cases, the annual report may be required to also include an auditor attestation regarding the internal controls. However, there is an exemption for smaller companies that fall within the definition of an emerging growth company. So for a Canadian foreign private issuer, generally you'll be exempt from the auditor attestation requirement unless you have a public float of more than $700 million US, or you have closed a U.S. public offering and 5 years have passed since that first U.S. public offering. So many companies, they don't have to do this auditor attestation for many years. Reporting companies also are not permitted to provide any personal loans to directors or executive officers. If you have any existing such arrangements, they would have to be addressed as part of the going public process in the U.S. Reporting companies are subject to the U.S. Anti-Corruption Statute, Foreign Corrupt Practices Act, so you would need to comply with both the Canadian and U.S. anti-corruption rules. And then lastly, if there was ever any takeover bid or going private transaction involving your registered shares, the SEC rules would apply to that kind of transaction. Thanks. We are out of time, but that is the end of the presentation. So we won't have time to address any specific questions given that we are at the hour, but thank you everyone for joining. And if there are any questions that you have not yet submitted, feel free to reach out to any one of the presenters separately. And if there are any questions in the chat that we have not yet answered, we will reach out to you after the presentation. Thanks everyone for joining.